Welcome back to Lazy-Dividend-Life. I'm an income investor living off dividends, so I get to spend my time freely. I'm not a financial guru or Wall Street trader, just a regular person who built a portfolio that pays me enough to cover my life. I use ETFs for income and stability, so I don't have to stress over the stock market every day. If you're curious about FIRE or want stable passive income, this channel might be for you. Let's grow our dividends together the lazy way. Today, I'm going to talk about why I avoid QYLD and how I choose better covered call ETFs. QYLD sells call options at the money strike prices, which means they sell options close to the current stock price. This strategy generates high monthly income, but it also means the fund often gives back a lot of its gains when the market moves. Over time, this can reduce both your income and your portfolio's value, something I call wealth destruction. So, what's the difference between at the money and out of the money? At the money options are options with strike prices close to the stock price. They generate higher premiums but limit upside gains and increase the risk of giving back gains during market drops. Out of the money options have strike prices above the stock price. They offer lower premiums but let your portfolio benefit more from stock price increases and reduce the chance of big losses. Why I avoid QYLDs at the money strategy? Because QYLD writes at the money options, it often caps gains and can lose a lot when markets fall. This means high yield at first, but long-term capital decline. For me, this is not sustainable income or growth. How I pick better covered call ETFs. I focus on funds that use all of the money options or a mix, balancing income and growth. I look at NAV and the total return, avoiding funds that lose value over time. That's why I prefer JEPQ, SPYI, and the QQQI. They have better long-term performance and less capital decline. Always check fund performance and NAV before investing. Thanks for watching. If you want to build a portfolio with steady income and less risk, subscribe and hit the bell to not miss my next video. See you next time on Lazy-Dividend-Life. Bye.